we believe, halfway through this bull market. And halfway doesn't mean we're halfway through the price increase, because, at the end of a bull market, prices tend to go parabolic. So we have no idea where but we feel very strongly, just based on-chain analytics, looking at them versus the short 10-year history, a little bit more than that history, that we're halfway through the bull market. What's very interesting, since the ETFs were launched in January, many people think, all right, the boom, and we've had a very nice showing, David versus Goliath. We're in the fight, and very
congratulations
happy where we are. Yeah. But not one major.
Don't forget to subscribe, traders. Let's continue with the interview to analyze it later and also comment on some of the most important news of the day.
What we call them wirehouses, like Morgan Stanley, UBS, Wells Fargo, Bank of America, Merrill Lynch. Not one has put Bitcoin on its platform yet, a Bitcoin ETF. They're all doing their due diligence. And I think what's going to happen is within the next few months, one will, and it may be not the big ones, it may be an independent RIA like LPL. They tend to move a little more quickly. Once you get one with a spot Bitcoin ETF on its platform, the others will fall in line pretty quick. And there are three big building blocks. Institutional is one, and I would put it sounds like retail distribution, but these are institutional decision makers at B of A, Merrill Lynch, and so forth. So that's one. The second is, this is a replacement for gold. So we assume that it's going to subsume 50% of the gold, what would be the gold market, especially as younger people are looking to diversify. And then it is an insurance policy. In emerging markets, I just visited El Salvador and had the pleasure of meeting the top officials there, and they are blazing a trail, making it legal tender, and giving their populations, or showing the way for other countries to give their.
What a brilliant move!
Yes, it is a brilliant. There are two.
What a brilliant move!
President Bukele is going after two big ideas, and we're talking about them: AI and Bitcoin. And my mentor and friend, Art Laffer, who joined me on this trip, I think is going to be working with that government. It's only a $30 billion economy. Can you believe that?
Wow.
And here we're talking, and they're going after, they're being very progressive. They're putting in tax policies that are going to encourage innovation. So I think that's a very big idea. Think about that. El Salvador, the entire country, 30 billion.
Wow.
And
time to buy some real estate in El Salvador.
Yeah.
Wow.
Bitcoin's integration into the mainstream financial world is gaining momentum, particularly as major financial institutions like Morgan Stanley consider incorporating it into their platforms. Although these institutions have not yet officially adopted Bitcoin, there are strong indications that they might do so in the near future. This potential adoption underscores a significant shift in the perception of Bitcoin within the financial industry. One of the key reasons for this shift is the growing view of Bitcoin as a viable alternative to gold. Traditionally, gold has been a cornerstone of wealth preservation and a hedge against economic uncertainty. However, Bitcoin's unique properties and increasing acceptance have positioned it as a modern equivalent, with many experts predicting that it could capture up to 50% of the gold market. This would mark a profound transformation in investment strategies and asset management, as Bitcoin's digital nature offers advantages such as ease of transfer and divisibility. The impact of such institutional adoption would be multifaceted. For investors, it could mean more options for diversifying portfolios and protecting wealth. For the broader financial ecosystem, it would likely result in increased legitimacy and stability for cryptocurrencies. As more major players enter the space, the infrastructure supporting Bitcoin is expected to improve, further enhancing its appeal and functionality. In conclusion, the growing interest and potential adoption of Bitcoin by major financial institutions like Morgan Stanley highlight a significant evolution in the financial landscape. Bitcoin's role as a potential replacement for gold could lead to substantial changes in how assets are managed and preserved, reflecting the increasing convergence of traditional finance and innovative digital currencies.
It's so interesting how surreptitiously Bitcoin really got into the hands of 50 to 60 million Americans and has become an election year issue. In fact, for many voters, for many voters, it is the election issue, and that is why for the Financial Innovation Technology Act of the 21st century, so FIT 21. Was able to attract 76 Democrats. I think when the Republicans basically turned this into an election year issue, whether accepting campaign donations in crypto or saying that they would protect the right for self-custody, that's a big one. That's a very big one for Bitcoin. And we're very much aligned, even though we have an ETF, and that could be a centralization vector. We think both are true. Self-custody for the early adopters and those who learn more about the ecosystem, but then just getting people into understanding what this is, how powerful this movement is. That is the role of a spot Bitcoin ETF, because once you own a spot Bitcoin ETF, you want to learn even more about it.
Yeah.
You'll want to understand the risk profile, the return profile.
Bitcoin has significantly influenced the political landscape, particularly in the United States, where it has become a notable election issue. As digital currencies gain traction, Bitcoin's impact on politics is increasingly evident. Politicians and voters alike are paying closer attention to cryptocurrency policies and their implications for the economy and personal freedoms. The rise of Bitcoin has sparked debates among candidates, leading to divergent stances on its regulation and integration into the financial system. Some politicians advocate for stringent regulations to prevent illegal activities and protect consumers, while others champion a more laissez-faire approach, emphasizing innovation and economic freedom. This division reflects a broader ideological split, with libertarian-leaning voters typically favoring minimal regulation, viewing Bitcoin as a symbol of financial independence and resistance to government control. Bitcoin's presence in political discourse has also mobilized a segment of the electorate that prioritizes technological advancement and digital rights. These voters are keenly aware of candidates' positions on cryptocurrency and are likely to support those who align with their views on promoting and safeguarding digital assets. As a result, political campaigns are increasingly addressing Bitcoin-related issues, recognizing the growing importance of this topic among the electorate. Moreover, Bitcoin's influence extends beyond policy discussions to campaign financing. Some candidates have embraced cryptocurrency donations, tapping into a tech-savvy donor base and signaling their support for the digital economy. This trend underscores the evolving nature of political fundraising and the broader acceptance of Bitcoin in mainstream financial transactions. In summary, Bitcoin's role in the political arena has expanded, shaping policy debates and voter priorities. As the digital currency continues to evolve, its influence on politics will likely grow, prompting ongoing discussions about its regulatory framework and integration into the broader economic landscape. This dynamic underscores the importance of understanding Bitcoin's political implications, as it becomes an increasingly salient issue in electoral campaigns and governance.